Hi there, my name is Andy Farquharson and I'm your host on Alternative Exit,
the podcast dedicated to educating small business owners about the possibilities, benefits and challenges of transitioning to an employee ownership model. Did you know that there are over 200 million SMEs around the globe with an owner that will be retiring within the next 10 years? Many of these owners will never actually find a buyer for their business, forcing them to close their doors, wreaking havoc on their employees and the communities. There is an alternative. This show will explore different forms of employee ownership and the best practices for a successful transition. Each episode is going to feature interviews with experts on employee ownership, business owners who've successfully made the transition, and consultants who've helped facilitate these changes.
Okay, now let's get on with the show.
Hello everybody and welcome back to the Alternative Exit. Today we've got a new special format. This is the first time we're doing a double interview, bringing together two leaders from Monarch Investment Partners. So offering a rare dual perspective to explore how capital, leadership and ownership come together into practice. And so our first guest today is Katie Kimball. So Katie comes from a capital markets and investor relationships background, helping to connect institutional capital with these new ownership models and also sort of impact investing. So Katie, welcome. And Michael McKinley, he brings deep experience in structuring and executing these transactions to employee ownership, working closely with management teams and the employees through these ownership transitions. So together they've formed Monarch Investment Partners, which is an investment firm focused on supporting management buyouts and transitions to employee ownership, partnering with all the leadership and the teams to create these long-term sustainable ownership structures, which every listener to this podcast knows and loves. So guys, thank you very much for joining the Alternative Exit.
Thank you for having us.
Awesome. So as I mentioned, this is the first ever double episode and it feels particularly fitting given the nature of what you guys do. And especially something that Michael mentioned on the pre-call is that something that's quite rare in a partnership is that when you guys sort of thought about getting into business together, you did a personality test. Often in what they try to do is you try to find people on the opposite sides of those personality tests. So your weaknesses are matched by their strengths, but you guys almost had the exact same personality profile. How does that show up for you guys on a daily basis?
Yeah, great question. I'll jump in first and then Michael can certainly chime in as well. You know, it's interesting because I think when you look at the personalities and a lot of personalities in employee ownership do tend to be fairly similar in terms of their values and kind of how they show up in that role. What we do have is complementary skill sets. So that's what the personality test isn't measuring. And that's what's really valuable in coming together and that we are very aligned from a personality and values and vision point of view and kind of this long-term mission to create more employee owners and how that feels for us, but really bringing kind of complementary skill sets to the table to make that happen effectively.
Michael, you're on mute at the moment. There we go.
Yeah, I used to work as an audio engineer. You'd never guess. But so Katie's right. It's so interesting to find someone, and I guess to back up, as part of a, prior firm, they did some very deep testing about personality types. And so had a lot of extensive testing on that. And it came back that I think I had the most rare personality type according to this one particular test, which was interesting because I worked with a number of partners across a different spectrum. And so to then be in conversation and find out that she had the same rare personality type. And so it was two diamonds in a rough that feel like we can communicate and we understand the values and the way that we interact together. I think there's a level of understanding that makes a lot of sense. But coming from different backgrounds where there really wasn't a lot of overlap. And so she's exactly right that the skill set is very complementary. And so it makes it nice to go through the day when we're able to communicate well, but then focus on our individual strengths to be more complementary.
Yeah, it's fantastic. It does sound like from a skills perspective, having like a symbiotic relationship. So yeah, that's all. So Katie, coming to you, we know that that there's often a perception that employee ownership and external capital don't normally fit well together. Not so much in the US, but definitely sort of in other parts of the world. I mean, how does Monarch look to be able to bridge that gap? And while you're going through that, you could sort of help us understand a little bit more about the space that Monarch plays in.
Yeah, absolutely. And it's such a good question because that's kind of what started Monarch. If you look back as to really where we started this conversation, and I've spent so much of my career kind of in the traditional alternative investing space, different platforms, and seeing funds get raised for different purposes and different types of investments. And when I came to the employee ownership world about 5 years ago, I was scratching my head saying, how come there's really no external capital here? Why are these two worlds kind of operating very independently? And Michael and I started batting around that idea of what are the biggest inhibitors to growth of employee ownership, particularly in the US, but more broadly. And part of it was that access to capital. I think there's a couple of reasons for that. One, there's a perceived complexity behind employee ownership transactions. And so if you're not really in the weeds of knowing kind of the nuanced structure, how to make sure these plans are set up to be long-term and sustainable, it's no different than learning any other skill or any other asset class, but it does kind of keep some market participants at bay because of that perception. And so part of what we're trying to do is change that and normalize this and grow the capital market for employee ownership transactions, partially through awareness, partially through education, and partially through proving that this model can work, bringing external capital. And, employee ownership is great. It's for those like-minded sellers who really care about legacy and continuity and preserving their companies and their communities and helping their employees. But to fund that, at least in an ESOP transaction, which is primarily what Monarch focuses on, you really need a benevolent seller who can fund that transaction themselves. Without that, without that access to external capital, seller really needs to be able to transition out of their company over 5 or 10 years. Most sellers don't come to the table with that kind of time horizon or risk appetite to do that. And so you're relying on this benevolence that exists in this small ecosystem, but to grow the ecosystem, you really need more capital behind that so that it's applicable and relevant for a wider group of sellers.
Okay. And what are the sort of size and style of transactions which Monarch is looking to support?
Yeah, so we're focused primarily on 100% employee-owned or ESOP transitions. So companies that are going from either founder-owned or whomever the owner might be, transitioning to 100% employee ownership. So we use the ESOP structure here in the US. There's a lot of tax benefits that support that really help from an underwriting perspective and getting comfortable with the risk profile and the cash flow coverage. There are other models in the US. There's the EOT, there's the worker co-op. Monarch is not as focused on those. As you mentioned in Michael's background, he's got deep expertise in the ESOP space. And so we're sticking true to the model that we know and that we think works best from a modeling and underwriting perspective.
And Michael, like when we do hear from the investors that are coming into the space, we do see that like in investing an ESOP reduces their risk, like from that alignment of incentives that's actually created through the organization. I mean, how do you see ESOPs coming to light? Or coming to life within an organization?
Great question. But you're right. I mean, I think the bottom line really is this alignment of incentives. And there isn't really a lot of data going back that's been public about how well they have performed. And we're starting to get more benchmark data to see this. But what tends to happen is that over time, employees, as they're communicated the value of what they're receiving and in this equity participation, and they're supported by a management team that is transparent and open and reinforces this alignment, that they start to understand this relationship between their job and the value that they're creating, and then the benefit that they receive from that. And then as that cycle starts to perpetuate itself, it really starts to take off. And what we see is that it takes about 3 years to really start to see a difference in people's behavior and in the economics of the company's performance. But then over time, that tends to compound. And we're starting to get a lot of good data now about enhanced revenue generation, margin improvement, reduction in sick time, all kinds of benefits to productivity of the business in that relationship. But it does start with that alignment of incentives and repeated communication.
Yeah. Well, let's sort of double click on that a little bit. Like it's a repeated communication as being one, but like communication alone is not just going to help people understand that they're now owners. So what are some of those actions that you help these companies take to really feel and take advantage of that ownership structure?
Great question. It's something that when you start a job, you're typically told, here's your hourly wage and here are your benefits. And here's what's expected of you. Here's when you're supposed to be here, things like that. Most people actually don't really understand financial statements. They don't really understand the economics of business and how it works. They might be very good at their job, but if nobody ever takes the time to help them see the bigger picture the way an owner would. So you're really training everyone at every level how the business works, how business in general works, how financial statements work, what those financial metrics mean, how they relate to your personal life. And so it can seem a little bit bewildering sometimes for management to realize that they have to start sometimes with explaining what an income statement is or what a balance sheet is and what that may mean for that individual and how that individual statement, and so that they can start to relate and understand. But over time, what we know is that people will manage their behavior to the data that they're given feedback on. And so if the management team communicates what's valuable in terms of measurable behaviors, people will adjust their behavior to that. And it can be different for different businesses. But that's a big part of that communication to reinforce the behaviors that you want.
Okay. And how do you, like, you talk about sort of education and like giving people access to data. I mean, how have you been helping these organizations to turn that education and access to data into action?
A lot of that can be open book. So sharing something in the financial statements, it might be profit, it might be revenue, it might be some data that's relevant to your job that you have control over. And so I think it's transparency at some level in a business, that the more relevant information you give employees, the better they can attune their behavior to the output you desire.
Okay. Really cool. So look, I want to take it back a little bit, Steph, a little bit earlier in your process at the moment. So when you think about when you're going to underwrite a case, I mean, Katie, this may be more onto your side of the fence, but how much of these performance improvements that you're going to be taking from employee ownership, how much of that is baked into the case, or are you just relying purely based on the sort of prior performance financial?
Yeah, I mean, as with most underwriters, we're going to look at what the base case looks like and then model in some upside and some downside. And our base case models are always just assuming the business operates at status quo. Maybe there's some level of growth built in based on the industry that they operate within, or, within specific dynamics in the macroeconomic environment. But we're always going to assume kind of a pretty conservative case to start with, and then layer in what does that mean if we do get some of those productivity enhancements and or revenue enhancements, or maybe there's additional growth beyond what we envisioned. But that's really kind of saved for the upside model and what we think we could get. But we always want to underwrite very conservatively, making sure that these businesses are durable on their own, that they can withstand a downturn. And that kind of goes to the buy box that you were asking about earlier, Andy. And what do we really look for? And, we're not looking for startup businesses that don't have any measurable operating history. We need to see how companies have performed, at least over the last 10 or 15 years, right? So these are businesses that have been able to survive other economic shocks, other macro events. We want to understand what happens. How did the management team lead through those events? And that all goes into our underwriting process as well.
Okay. So it sounds like as part of that sort of pre-deal diligence, you're both being involved. Like, it sounds like, because a bit of this is sort of looking into Michael's purview as well. So what does that role for you, Michael, look like when you're going in to evaluate whether or not this company is going to be able to thrive in an employee-owned environment? What does that look like for you?
Really great question. So for us, we're not a private equity firm. So we're not coming in and laying people off or trying to change a culture or put in new executives. But that means that we're working with the management team that's in place. And so we're going to spend extra time on the front end, really understanding the tenure of the people that are there, their ability to lead the organization, the depth of the relationships that they have with their customers, with their subordinates, with their suppliers. Because what we don't want to do is we don't want to invest into a business that's in the middle of a management change at the same time that we're putting on a lot of leverage and changing the ownership structure of the business. And so it's really important to the value of the business that ownership group is investing in the next generation of management prior to going to market. Will increase the value of the business significantly, and it will increase our ability to finance that transaction into an ESOP, because we know that management team that's going to be there during the life of our financing has experience doing it, has demonstrated that level of success, and that we can come in and support that. And so there is a lot of diligence on the management team itself as part of our transaction.
Yeah. Do many of these, when you're doing your due diligence, do you get access to go beyond the management team and speak to the front line?
Great question. That's a tricky one because once the word gets out that the business is for sale, that can have meaningful impacts to employees, to supplier and customer relationships. You know, when there is a rumor mill starts that the business is up for market, um, that communication can get away from, and giving us access to interviewing people is a bit of a wild card potentially. And so what I really love is when a business owner starts that conversation years in advance and says, 10 years from now, I'm going to sell my business, but I'm going to sell it to a trust for you. And I'm not going to sell it to a third party or something like that.
How
And
many of
so
those owners do you find? How many of those owners do you speak to?
I think 2 in my career. And I went to work for one of them. So that is unusual. And so being in a position to talk to frontline workers as part of a sale is a bit of a risk. Obviously, we like it, but that business owner needs to be very comfortable with that communication and be out in front of it to mitigate that.
Yeah. Yeah, no, it's you really want that right environment, like beforehand. But I mean, did I hear you correct that you'll sometimes spend some time working with these management teams to set up the right frameworks for them prior to you guys looking to doing a transaction?
It's not something that Monarch does. But if we talk to an owner and we start to evaluate the value of the business, and we start talking about a transition, and we realize that there's still work that needs to be done on the management team, it will be worth it to that business and to that owner usually to step back from the process and solidify those parts that need additional work before coming back to market. Not something that we'll do. There are a lot of professionals that can help with this. But putting in that time and effort before you go to market to make sure that the management team is tenured, has a good performance history, and isn't in the middle of a major transition will add value and put more dollars in that seller's pocket.
The space that you're playing in, from like the part of the capital allocators supporting the employee ownership movement, has been growing sort of exponentially over the past couple of years with the sort of leaders like Apis and Heritage and a few others in the space, which your name is now sort of a part of that same group. But how do you guys differ in terms of both sort of from sort of a buy box, from a pre-deal perspective and then sort of the post-deal support?
It's a really good question, and we're excited to see this industry grow. And so we hope that there will be many others that follow as well. It's also a little bit humbling and exciting to hear that our name's now in that mix, because those are really well known, and we look up to and admire Apis and Heritage and what they've been able to do for the industry. And they've got a really solid story as well in terms of how they're helping low-income workers. If I had to say the major difference, we're probably a little bit broader in terms of our scope. We're not primarily focused just on low and moderate income workers. We really think an ESOP can be a great exit option for a lot more businesses than it is today. And those businesses take a variety of size, function, industry, et cetera. That being said, we do want to have a meaningful impact. And so we're very focused on how many people we can impact and what that materiality is to their wealth creation and financial inclusion prospects. I know part of our goal is stewardship. And I think others in the industry feel the same way. That's where I was going with the I think. I think there's a group of us that are kind of what I hope is the tip of the iceberg in growing this industry. I think we all feel this sense of obligation to do things the right way and come up with best practices and come up with formats that do right by employees, do right by investors, and it's a win-win for everyone. In the past, you've seen some folks come in and be fairly extractive and abusive to the structure. We come at this from a very, like I said in the beginning, I think it was before we turned the recording on, but we're not trying to sacrifice returns for impact. We really want to prove that both can coexist, and it doesn't have to be a compromise one way or the other. And so to do that, we want to build a playbook that others can follow. And I think we take that stewardship mindset very seriously.
Okay, really cool. So moving that to that in that sort of pre-transaction, like obviously that sort of identifies a little bit more of the types of companies. I mean, can you share about the size of companies and so that you guys are looking to target? And is there any geographic focus?
Yeah, a great question. So we are looking for companies with a minimum of $5 million of EBITDA, of free cash flow effectively. We'll go up to about $15 million of EBITDA. And so pretty wide range within there. Geographically agnostic within the US. The ESOP is a structure focused on the United States. Doesn't mean a future fund might not be focused on other geographies or areas of impact. But for now, the US is our primary focus. Geographically agnostic within the United States. industry agnostic as well, although we always like to remind people that an ESOP is a retirement plan. And so it has to be a good industry that would be a prudent investment for a retirement plan, and one where we can get comfortable underwriting the cash flows of that business to make sure that the leverage buyout model really works.
Katie, what are some of those industries that are an immediate no-go for you that aren't going to be a fit for a retirement?
Yeah, nothing's an immediate no-go. I would say everything. There's always nuances within every industry. That being said, our fund is really focused on making sure we do good and create good headlines. And so we're fairly limited or probably will not invest in things that would be considered to do harm to people. So what you might traditionally call kind of your sin industries for folks. The immediate no. There's some interesting nuances here in the United States. There's a lot of cannabis opportunity. We're probably not going to invest in that, although I do think it's a good opportunity. It's just not the right fit for Monarch at the moment. In industries that are heavily project-based or very cyclical, where it's hard to have visibility into what the revenue profile is going to look like long-term, can be a little bit more challenging. Not impossible. Again, there's nuances to every industry, but kind of at a broad brush, that's the...
Yeah, very cool. Yeah, thanks for sharing that. I think understanding that buy box and that target super helpful for our listeners. Michael, coming to you for sort of in terms of how Monarch presents itself to support sort of at the post-transaction. Yeah, if you could just share a little bit about sort of how you help and how it differs from other firms out there today.
So I actually wrote a book on this, and
you've got plenty of answers ready.
Great. Well, but the reason being that there really wasn't any material out there about once you become employee owned, how do you manage that? What does that mean? What are your responsibilities? And so often you have investment bankers that will help with the transition. And then once that sale is completed, they receive a fee. Maybe they call you later just to check in or stay friends, but really not involved in the business after the transaction. But for most people, being ESOP owned isn't something that they've ever encountered or learned about how to do. And so they don't really have that support and somebody who's there holding their hand along the way with a checklist that says, each month, here are the things that you need to be doing. Here are the changes that you need to be making internally. Here's how you implement these programs. You follow the right regulatory. There's banking and insurance and board requirements and different tax forms that you might not have ever had to fill out before. And so there's a laundry list of business administrative activities that have to be done. And what's also interesting is now you have a new shareholder. It's a trustee. That trustee of that ESOP trust is legally the shareholder of the business. And so there's a lot of relationship building and communication that needs to go along with that too. And so there are a lot of unique dynamics that I've been through in my career, and I've seen best practices, and I've seen where it's not been handled well. And so having that playbook as to day one, how are we going to implement best practices and communication and make sure that everybody knows what they're supposed to be doing and when they're supposed to do it, I think is part of the benefit that we bring to the table is not just financing, but also that ability to help shepherd you through the best practices to get the best outcomes.
Yeah, I'm sure that's going to be sort of incredibly valuable for people. As I said, there aren't many manuals for things. So we've written your book. We've got one manual, but yeah.
Which is why I wrote it, because I went through a transaction and the business owner said, I've talked to you every Friday for 2 years through this process. And now we've transitioned to employee ownership. I don't know what I'm doing. There's no manual that tells me what to do. And so I started doing some research and confirmed that. And so felt like the industry needed that, some kind of a checklist and ability to tell people, now that you're ESOP owned, what do you do?
So going to the other end, all the way to the other end of the spectrum, I mean, you guys you talked about obviously being very much mission aligned together, and also you've talked a lot about being very focused on like the double bottom line. Like you've got to be making sure that you're delivering returns and also sort of having that positive impact on the community. I mean, how do you guys measure your success as Monarch, and how do you then communicate that back to your LPs?
It's interesting because when we set out, we didn't call ourselves an impact fund necessarily, even though we are very mission aligned. But we did have a set of metrics that we were looking at of what does success mean to us. And it's the number of new employee owners that we're creating. It's how much wealth are we targeting to create for them? It's how many jobs are we keeping rooted in local communities? And what's the economic impact of that? Things like that. And so that all goes back to our LPs in annual reporting. But bigger picture, it's about finding partners and particularly LPs that believe in that same mission. So, I think some of them might bucket us as an impact manager now, and I would venture to say we are, but to us, it didn't really start out as we need to fit a certain bucket. It's like, what's our mission and how do we do good in this world based on the skill sets that we have? How do we fill this void in the market that we see? In a
And
way
what's
that's
exciting
good for
too
everyone.
is that we get to put returns and purpose on a level playing field. And so we have to generate good returns to get investors to perpetuate this, to do more of this. There has to be a market benchmark that we're meeting and exceeding in order to drive more capital to the space. But at the same time, we get to get up every day and create stories like I've seen in my career where you walk into a business that didn't sell to a strategic third party and didn't lay people off. And not only that, put wealth into the hands of employees such that you get to hear stories where people get to buy their first home, or they get to retire with dignity, or they get to help their family, help their grandkids go through college. And so on the one hand, we're generating, I think, competitive, we're focused on returns, but there's also a really important social impact to the people and to the jobs, to the communities that they serve, and getting to look at that on a level playing field, which I think is unique and needs to be more of.
Yeah, I'm sure incredibly fulfilling for you guys as well to be able to have both of those. That's
It's
awesome.
exciting to get up every day.
Yeah, which I think is something that you're also giving to the companies that you invest in too, is to be able to solve that. So that is fantastic. Guys, thank you so much for your time today. Now, before I leave, what I typically ask my guests is a quick 3 questions and you offer a quick response. So Katie, I'll come to you first on this first question and Michael, you're second. So who is the leader that you most admire in employee ownership?
My gosh,
Oh,
there's so
Sorry,
many.
Katie.
Wow. I don't know that I can pick one. And it's interesting for me coming at it from a different perspective. Like I'm 5 years into the employee ownership journey. Michael's much, much longer. So this is going to sound interesting, but Michael was one of the first people I met in the space. And I found him to be the most open-minded and most forward-thinking in terms of how to expand employee ownership. So I might just have to say Michael.
Hey, that's a great, that makes a lot of sense considering you're both partners in this business. Michael, over to you.
that's a tough one to follow.
I don't think I've ever had anyone self-nominate.
I will say there was the business owners that I referenced earlier that I wrote the book for, and I'm sure they wouldn't want to be publicized, but there was a company in central United States that had a very similar setup to us, male-female co-CEOs living in different cities, and they started their business because they wanted to run it differently than how traditional firms in their industry had ever worked. And they had a better idea for how business could work and how it could work with their employees, and then ultimately sold to their employees. And in every way, they embody this servant leadership approach. And it's a mindset of, it's a win-win approach to life. That if we do well and you do well and the business does well, the community does well. And so with everything that they do from the moment that they started their business was a focus on creating that win-win-win approach to everything and putting purpose and profit on a level playing field. They become the marquee business for people to work. So I would say that's probably who we've modeled ourselves after humbly as best as we can.
Okay, so okay, if at some stage we'd love to learn a little bit more about that business, but if you get their permission, we'll definitely update the pod later. Okay, moving on to the second question and we'll let this to either one of you. Like, what is your favorite resource on employee ownership?
Yeah, I'm happy to jump in there. There's a lot of good data that's now coming out from a lot of industry groups, particularly here in the US. So we find a lot of data within the NCEO. We find a lot of data within the ESOP Association. We've gotten fairly involved in kind of the policy side of employee ownership. There's a lot of really positive legislative environment right now. And so ESCA here is another group that kind of gets involved in that. And then I'm very excited to see there's a lot more conversation going on at the university level about employee ownership. And I think that's really critical to helping grow and bring in the next level of professionals and just educate, whether it's company folks, professionals. So, all the universities here that are starting those programs and or continuing those, there's a lot of good research coming out of those groups too.
Michael, is there anything else you'd like to add to that? A favorite resource for you?
No, that's really it. She nailed it.
Okay. All right. Then lastly, what would you say to a business owner who's sitting on the fence regarding a transition to an employee ownership model?
Katie knows my answer to this because I ask it all the time. And my experience coming from an investment bank where a business owner would typically show up and they say, I want to sell my business. And usually the first response is, how much is it worth? And who's going to pay the most for my business? And what the data says is most of those outcomes either don't work. And for those that do work, the seller's typically unhappy. And so I tried to change that in my practice. And the first question I would ask is, who do you want to own your business? And when you approach that from a standpoint of where do you want that legacy to go? Who do you want the employees to work for? Who do you want to benefit from the business going forward? Where do you want it to be? When you start thinking about those questions, I think you really start to get to more of the heart of the culture and the legacy of that business. And an ESOP can make more sense for a lot of people in that when you ask that question. And so I would encourage more investment bankers and more business owners to think about who's the rightful next owner of your business, because it may very well not be a private equity firm.
Well, I love that framing. I think it's a great question. So thank you both so much for your time, for joining us for that first ever double episode. Where can people go if they want to follow your stories and learn more about Monarch?
Yeah, well, please feel free to check out our website. We're www.monarchinvestmentpartners.com. Just a quick note, the Monarch name is a nod to the butterfly effect. So with small change, we can hopefully create transformational impact. And lastly, I just wanted to thank you, Andy, for the work that you're doing in this space to create awareness, for having us here to get to talk about all of this today. It's a really important conversation and you're leading that. So thank you for having us. Thank you for the work that you do. And thank you to your listeners as well.
Thank you very much. Well, Katie, thank you for your time. Michael, thanks again for your time and really appreciate you all joining us on The Alternative Exit.
Thank you.
Thank you.